Well, hello and welcome. My name is Chris Tanner. I'm the Sales and Education Manager here at New Direction Trust Company, and we're excited to have kind of a new topic today and excited to have David Goldberg here with the Investor's Source. And I'll be introducing Dave in just a moment here. But today we're going to be talking about a type of real estate investment that maybe not everybody is aware of. Uh, a little bit more of being the bank, I would say. And so I wanted to go ahead and kick off today like we have with all of our webinars. And we must start with this disclaimer. And essentially, the webinar today is meant to be educational. New Direction Trust does not provide any investment advice. We don't endorse any specific investments. So anything that you hear today, we would certainly encourage you to consult with your financial advisor, your accountant, or a trusted fiduciary before making any decisions. And really just today, just an opportunity to learn about a form of investment that I don't think a lot of people are aware of. And before I introduce Dave, I just wanted to talk a tiny bit about using retirement funds as a way to capitalize or fund whether it's a real estate investment or precious metals or even investing in trust deeds like Dave's going to talk about here in just a little bit. I suspect most of you on the webinar today are already familiar with the idea of what a self-directed IRA is and may already have one. But for those who are not familiar, a self-directed IRA is simply a retirement account that opens up more possible investment options. And most retirement accounts that are out there will allow you to invest in publicly traded securities. And publicly traded securities are going to be stocks, bonds, mutual funds, ETFs, things of that nature. But when we begin to talk about things like real estate, lending money on real estate deals, precious metals, there's a whole variety of investment options that are out there. You can't do that with most of the retirement plans that are offered in the United States at this point. So just wanted to point out that New Direction Trust, we do offer self-directed IRAs. And I always like to point out that when you see the word self-directed, it's really a marketing term. It's not an actual type of account. So every account that we offer is in fact a self-directed account where you can invest in these things. So kind of already mentioned this, talked a little bit about the things that you can invest in. And sometimes it's almost easier to talk about what you can't invest in. There's really only two categories of investments that a retirement account cannot invest in, and that would be collectibles. So think of like art or old, cars, collectible types of cars, and then insurance products. So those are the only two categories you cannot invest in. So really a whole wide variety of things that you can invest in using these types of accounts. And so with that, Dave, how are you doing today?
Doing great, Chris. Thank you for having me on today.
Yeah, absolutely. I'm going to switch the controls over to you. And I just wanted to quickly introduce Dave Goldberg. I have actually known Dave for quite a few years. We've known each other, been to a lot of real estate investor meetings, and I've gotten to know you through the years, and it's been nice to get caught up with you again. So,
likewise.
If I thought a good way to start out is if you could just tell us a little bit about yourself and your background, and then also about the Investor's Source. I know that's the business that you operate. You do some private financing for real estate investors. So yeah, tell us a little bit about yourself.
Okay, thank you again, Chris, and thank you all for attending today. I come from an extensive background in business, marketing, sales, and finance, a little bit of teaching as well. I started the Investor's Source 11 years ago, one-man show out of my kitchen, and it has grown to a full-time staff of 4 and a part-timer. We have been making loans during that time. As Chris said, we are the bank and we are the alternative to traditional banking. Our model has been that we've been making loans from individual investors to individual investors, funding one deal at a time. The investor funds the whole deal, which I'll talk about in a moment in more detail. For the past 4 years, we created a fund 4 years ago in which we are pooling investments together, creating more opportunities for larger deals, deals that may not have been able to be funded with individual investors. So still using both models right now. They're both working extremely well. I'll get into both of those, but our company, as I said, has grown. We're out of the kitchen now. We have a full-time office here in Loveland and doing great. Chris asked me before how business was, and business is booming, which I'll talk about a little bit more later as well.
Okay, great. Well, listen, for whatever reason, yours didn't come up. So if it works for you, I'll just take control of the slides, and we'll kind of jump in. And yeah, tell us a little bit about trust deeds.
Okay, trust deeds are loans. And again, you become the bank. You're not owning properties. You are making loans to real estate investors. Trust deeds are also referred to as deeds of trust or hard money loans or private loans. You've probably heard a number of those terms. We are not making loans to people for buying an owner-occupied property. These are all for investment purposes, for things like fix and flips, new construction loans, both residential and commercial, some land development, but we're very careful about that now. Shopping centers, bridge loans where investors are fixing up a property using our funds short term and then refinancing with a bank for their long-term funding. So a whole variety of business loans to real estate investors for the most part, all secured by the properties themselves. They're short term, usually 6 months to 12 months, higher interest rate between 8 and 12% interest, paid back with either selling the property or flipping it or a bank refinance in general. Wanted to talk a little bit about some of the myths about private lending or trust deeds. To get that higher rate, people sometimes jump to the conclusion that we are lending to down and outers who have terrible credit, where the deals are very risky and the borrowers also have no money behind them. Sometimes that could be no further from the truth. We actually deal with a lot of investors who have good credit. They're very bankable. They have money, but their money might be stretched thin because they have a lot of projects going at the same time. So they come to us. We are an alternative that usually eliminates a lot of the red tape of lending with a bank, and we can get deals done that banks just won't do. Many won't do distressed properties, so we can do that. Construction loans can sometimes be difficult with a bank, so we can do construction loans. We can do loans a lot quicker than a bank too. So a big reason why investors come to us versus a bank is to get a loan funded quickly, sometimes within a week or even shorter, comfortably within 2 weeks. But that helps real estate investors close deals that they might not be able to with a bank. So that's I think a pretty comprehensive introduction to trust deeds. Many of you are aware of them, and there are many, many layers involved, which we'll get into as we go.
Yeah, and so you know, Dave, I'm just curious. We were talking a little bit before we got rolling here, and uh, a lot of people, we've got high inflation, interest rates obviously have bumped up. Historically, they're not high, but I think we've been used to really low rates. Just kind of curious what you're seeing in the market right now We probably have folks that are interested that are listening, as far as investors and how active they are. What are you seeing right now?
A lot of what I'm seeing is what all of us are reading right now is that, with the spike in interest rates, that there's been a pullback, that there is more inventory on the market. The price is not necessarily going down yet, but probably hitting a little bit of a plateau. There is some actual price increases right now on real estate, and the days on market is increasing. So I'm reading that like you are, Chris, and everyone else. What I'm actually seeing, though, as I mentioned right in the beginning, is that we have never been so busy. Our investors, we're getting slammed with loan requests right now, which is great. We do need more capital, which is something, that we're always on the lookout for more capital. But if, we have concerns like everyone else that rising interest rates might affect our market, but we're not seeing that right now. I think we're in a different market with investors where demand is still strong for housing. We're doing a lot of construction loans and fix and flips where the need is there. And, the commercial real estate market is strong now from what we're seeing.
Yeah, that's interesting. I was at a meeting recently, and this was data from like May. When I say we happen to be located in Colorado. You're in Colorado also, but in the northern Colorado market, one of the local agents said that the inventory that was available was like 14 days, and in a healthy real estate market, 3 to 6 months is more like normal. And so, although we're seeing some changes, there's just not much out there. So people looking to buy whatever they're looking to buy, there's just not much available at this point in time. And so it
Right.
was interesting. His take was that, when you have that little of product out there, he didn't expect things were going to like take a major 2008 kind of dive at all. And so
Yeah.
yeah, it pretty fascinating how little inventory there is.
And I think people in our industry are kind of predicting the same thing. I mean, nobody knows, and there is another interest rise expected soon that will have its effects. But I think our industry, lending to investors, is still very or pretty bullish on where we're heading. And I say, and maybe it sounds cliche, that I'm cautiously optimistic that things will continue, but we have to keep a very vigilant eye on where the market is going. And I think we're doing that.
Yeah. Well, Dave, for people that aren't real familiar with trust deeds, they kind of know what they are, but they maybe have never invested in them. What are some of the reasons, if you were just talking to somebody, that you would say, well, this could be a good investment for you? What are some of the advantages of doing a trust deed investment?
I will start off with a little bit of a plug, but more in general to this type of investing in general. I think trust deed investing right now is positioned as one of the strongest investments that you can find. As you mentioned, there are fewer and fewer investments that you can find out there right now that offer what you would like to see in an investment. And I think trust deeds do that, which I'll get into right now. So I don't think the time has ever been better to consider an investment like this. Number one, the returns that and excuse me if I say we during this presentation, I'm really referring to the whole industry, and I'm used to talking about our company. But the returns that trust deeds are giving back to their investors are nice and strong. They range between 8 and 12%, even in the market that we're in right now. That's because the notes that we invest in, as I mentioned, they carry a higher interest rate, and the points that we charge are generally between 2 and 4. So that lends itself to a higher return. The security factor is there. Every property is, or every loan is secured by real estate. How many investments do you know right now that are secured by anything? Yes, you can invest in the bank and get the FDIC security behind you, but what kind of rates are you going to get from the bank? So not only is the property secured by real estate, but every loan that we do is also personally guaranteed. There is liquidity in what we're doing. I'd say of the big three, that's probably the weakest. You can't just say, Dave, I want my funds back today. I need them. Whether you're investing directly into a single loan or in a lending fund, there is a time commitment you're going to make, whether the deal might go 6 to 12 months, so your money would be tied up, or in a lending fund, you're going to have minimum, they call them lockup requirements. Our fund is a year. Some are actually 2 or 3 years, but liquidity is fairly good. You're not going to be locked up like in certain projects you invest in for 3 or 4 years until the project sells off. And when I talk about projects, I'm talking about directly investing in a real estate project, which some of you have done. In your IRA, this investment definitely makes sense. All income to you is taxed as regular income, so it'll grow tax-free in your IRA like all your other investments. You, with us or with trust deed investing, you also get the benefit of working with professionals. And in self-directed IRAs, which as Chris mentioned, they all are, but how many investments are there where you're actually also, you're directing it yourself, you're calling the shots, but you also have the benefit of a team of professionals behind you who are looking out for your best interests. And as I'll talk about, there are so many things that companies like ours have to do to make sure loans are originated correctly and then also are serviced correctly and then paid off to make it a good loan. And another thing I like to mention is that this investing has a purpose behind it. It's not just throwing your money in the market and getting those returns or not getting those returns. We all love a good return, but I think a lot of the investors that I worked with just feel good about their money going towards fixing up communities and making homes nicer and building in communities which need more housing. It feels like there's a purpose behind it. And we're helping real estate investors who are borrowing the money realize their dreams as well. So I think overall trust deeds just have a wide range of advantages. And now more than ever, I think they are a great investment for the times that we're in.
Yeah, no, that makes sense. So I know there's different ways to do this, and maybe you can give us just an overview of the different 3 ways that you could invest in trust deeds.
Great. Well, the first one is the obvious one, or maybe not. You can actually make your own loans in your retirement account, lending to investors, and you don't need a company like mine. And we have investors, well, we don't have investors that do that, but actually we do. We have investors that make their own loans and lend through a company, or they lend through us as well. So your name is on the note and on the deed of trust or mortgage, depending on what state that the loan is in. The advantage to doing that, making your own loan, is that you get to keep the points. And that can be, depending on what you would charge, between 2 and 4 points. That could be a significant amount of money. The other advantage is that you totally control the shots and you choose who you want to lend to, and you don't have to deal with another party like ours. The downside, the big one, is the incredible amount of work involved with making your own loans, starting from the screening, the originating, the loan documents, the loan servicing, dealing with title companies. It goes on and on and on. I would say literally between origination and payoff, there are 100 steps involved in doing a loan right. I attended a class in my early days in trust deed investing, a fellow named Dyke Spotiford, who I would highly recommend. And there were a class full of private people who wanted to learn how to do it themselves. We came out of that seminar with a 3-ring binder this thick, and I can guarantee you 90% of the investors in that room decided that it was worth using a broker to originate their deals from them and not do it on their own. I would not be doing it on my own if I was not doing this as a full-time business. So the other disadvantage of doing it on your own is that mistakes get made if you're not doing this every day, and having a professional company to work with you can eliminate those mistakes and make sure things are done correctly. And the stakes are high in these deals. You know, we're talking 6 figures or more in some cases, and you want to make sure you're doing it right. The second way of investing is, as I mentioned, to fund your deals entirely, or to fund a loan entirely, but to use a broker like our company to handle all of the paperwork and everything else for you. There are a huge number of advantages to this. Like I said, the time involved in the whole process of doing a loan, you won't be making the mistakes that you would make doing it on your own. You probably will have a lot more opportunities working with a company like ours than you'd find on your own. And you could, again, as I mentioned, you could do your own and work with a company like ours. And just, again, the professional management that you get working with a company like us, we are going to make sure that the loans are done correctly and that you stay out of hot water, which can easily happen. The disadvantages of investing directly in a note and deed of trust, an individual one. By the way, I forgot to mention that you get your name on the note and deed of trust, and that is security to a number of lenders like that idea. The downside of that is when you make loans in individual properties or individual loans versus lending in a fund, you're putting all your eggs in one basket. And if that deal doesn't work out, you're kind of stuck. Now you have security, you have the property, and you have the personal guarantee of the borrower, but you have to deal with the foreclosure. And actually, if you worked with us, we would do that for you. But you, again, are kind of putting your eggs in one basket. I would also say there's probably less opportunity investing in your own loans, even through a broker, than using that broker's lending fund. Most of the companies that I know put more emphasis on their funds, and a lot of their deals get funded by their fund versus by their individual investors. So you would probably have your money working harder and more opportunities in a lending fund than you would in making your own trust deed investment to an individual. And the third, sorry. Yeah. So those are the disadvantages of making your own loans, pretty much versus making the loan in a lending fund. Then the final option that you have is that many of the brokerage companies like ours have a lending fund. What that is a pooled lending fund where all of the investors, instead of having your name on the note and deed of trust, the fund itself they are considered the lender, and the loans, the assets are all pooled into that fund. The advantages of that are many, and those advantages are that loans and your risk is spread out amongst many different loans instead of one loan. As I mentioned, you probably will have more opportunities in a private lending fund than you would making individual loans. And when you make individual loans, those are great, and sometimes you can get 10 to 12 to 14%. The downside of that is when those loans pay off and you may have to wait a week, a month, 2 months, or even 6 months for the next loan. Your money is sitting idle, and that brings down your overall return. Whereas if you are investing in a private lending fund, your money is working 24/7, 365, and there's never any downtime. The downside of lending in a private lending fund is that you don't have your name on the note and deed of trust. You have less control over what assets are contained in that in the fund itself. So when you are making your own loans, you get to choose which ones you want to fund. With a pool lending fund, it's called a blind fund, a blind investment, because you are leaving it up to the manager to make those decisions. But hopefully you're working with a manager that is very transparent and goes out of their way to keep you informed of the assets that they're lending on. So those are the kind of the three ways that you can lend. You can do it on your own, you can fund individual deals with a broker, or you can lend in a pooled lending fund.
Yeah, that makes sense. And so I think we've kind of talked about the loans yourself, the pros and cons. Uh, I think, is it all right if we skip through this one, Dave?
What to look for?
Well, yeah, so I think I had on the slides that you're making trust deed loans yourself. This kind of highlighted the pros and cons. And
Right.
so I think I was,
Oh, we've got all those covered.
yep, for sure. So let's talk a little bit about uh, if someone is interested in doing this, what are some things, if you were advising people to look for from a lender? We sometimes a hard money lender or private lending fund. Well, what would you look for if you were in the market shopping for something like this?
Yeah, and if you are out there shopping, don't feel, don't hold back on even asking your lender, what should I be looking for? And then see how they answer those questions. So yeah, a lot of it is common sense, but I think it's worth going through. You definitely want to work with a lender that has experience and has a track record. And, that's obviously important. That big reason is that with the kind of loans we're making, every loan is so different. Everyone has its different quirks. It's not like just buying a house to live in. You have so many factors that there's creativity involved, and a lender, the more experience and time that they've put in facing a variety of different situations, the better off you're going to be. I'll tell you, some loans we have learned the hard way. Overall, I think our track record, not to get into us too much, but I think our track record is really good. But you definitely want to be finding out the track record and experience level of your lender. As I mentioned, another big one is transparency. Investors are very interested, of course, in the returns that they're going to make, and as they should be. But I've had investors say to me, return is actually secondary to the amount of communication that a fund manager or even a broker keeps or puts out to his investors. You want to make sure that they are disclosing the types of loans that are being made, and also giving you the good with the bad. That if some situation does come up that is not the best, it happens in this business, that it's disclosed and that the investors are not kept in the dark. So I think that's a really important one. Reputation, of course, is important, and you're going to want to get references of how your broker or administrator takes care of their lenders. But I would also argue that it's really important to make sure that they treat their borrowers well as well, because you can have great relations with your lenders, and I know we do, and I think companies like ours do. But if the relationships with those who need money are lacking, then eventually the loan pipeline is going to dry up. You're going to have all kinds of money sitting around not working. That's going to bring down the return of the fund in it, or even your opportunities to invest more. And just not, if your broker is not taking care of both sides of the equation, the borrower and the lender, it's eventually going to catch up and not be a great situation. I put
Yeah, I guess that makes sense. You want those investors to come back and keep borrowing money. I mean, right? It makes sense. You want the repeat business.
We do. We have a lot of repeat borrowers, and that's a huge chunk of our business. Fortunately, we're getting new investors in too, but we get new investors from, a lot of it's from word of mouth, and if we're not treating our current borrowers well, we're not going to get those referrals.
Yeah.
I put down humility also on that list, and Chris said, "Oh, wow, I want to hear about that one."
That's
I
right.
put that there. As I mentioned, this business has so many different aspects to learn. We've done close to 300 loans, and I'd say confidently that I still learn something from every loan that we do. And you do want a lender, a hard money lender, broker, that if they get to a situation where they're not as experienced, that they're not afraid to reach out to some of their mentors and make sure that they're approaching the loan in the right way. Another thing you might want to check is, if you're looking at a private lending fund, you can ask if they have an advisory board. I think some fund managers are too proud to have an advisory board, but from the beginning, we've had one. I can go to the board for advice, and actually we put it in our charter that if loans are of a certain size, board needs to come in and give their recommendation. So I think that is an important factor to look for. Are your lenders willing to reach out and get the assistance they need and the advice from those who have been around? And we give advice to lenders as well, because we've been around the block for quite a while now. And of course, make sure your lender has a good team around them. We have an experienced team. We have 4 full-time people. We're not a huge shop, and we don't do thousands of loans a year. We do loans that make sense, and even if it's a few loans a month, we want to make sure that they're loans that are going to perform and make sense overall for our portfolio. But you want to make sure that the team is in place to handle what comes. They don't get too far ahead of themselves and can really handle loans professionally, so that borrowers and lenders keep coming back and loans are done correctly.
Yeah, no, I appreciate that. And I did want to mention for our listeners today, if you do have a question, if you're at a computer on the right-hand side, you're going to see down towards the bottom of your screen there a button that says questions. It's a little triangle, and if you click on that, you can just type your question in there. And feel free, I'll kind of give the go ahead here. Go ahead and type in any questions that folks may have. And let's see, Dave, I want to just get your contact information up there. And we do have a couple of questions. And the first question is kind of asking about the security of the loans, and just wondering if you can talk about if a deal goes bad, what does that look like? Does it always end up in a foreclosure, or are there other options? Like how do you protect yourself if the borrower can't pay?
Yeah, fortunately, we have not had too many experiences where we've had to take back a property. There are workouts that can be done prior to it going to foreclosure. I think in 11 years, we've only had uh, 2 or 3 actually go to foreclosure. The first thing we'll try to do is work it out. And if we can work with the borrower and extend their loan and help them get to the next phase, which is either selling the property or getting their refinance, I think we're really good at um, presenting options within our company that can work out the loan with them. But sometimes that's not possible and the loan does go bad. One of the options that we can do that we have offered, I can't even remember now if we've ever had one, but a deed in lieu is something that can avoid a foreclosure, meaning the borrower can actually choose to give back the property to us or whoever the lender is in lieu of their paying off their loan, and then it's up to the lender to do what they will with the property, either sell it or complete the project that was never completed by the borrower. Uh, in the name of transparency, which I said is important for your lender to have, I mean, we did one time, this is the one loan that we made that I talked to all of our investors about. It was a very large loan, a land development deal, and it was actually a $4.5 million loan. We had to actually take a discount on that loan to resolve the loan and move on. And so we actually had to pay, instead of taking the property back, which we considered, and our board considered that, we decided to make a discounted payoff or accept a discounted payoff from the borrower to resolve the loan, and then we moved on there. So there are ways, creative ways that loans can be resolved without foreclosure, and yeah, you know, a good lender will hopefully not have had to deal with too many of those situations, but it's good to have those tools in your toolbox when you need them.
Yeah, for sure. So we do have a question, and others may have this question as well. And I'm not going to let you answer this, Dave, but Dean was kind of asking, what kind of returns. So we can't talk about that in this environment, but I'm sure, Dave, that folks can reach out directly if they're interested. So we can't really address that, unfortunately, because we're just here for educational purposes. But you'll see Dave's contact information. Reach out, and I'm sure he'd be happy to answer those level of questions.
Absolutely.
The next question is, let's see, let me read this. So this is a good question. The individual is asking that in a pooled arrangement, how is this person as an individual investor secured or protected?
Okay, great question. I actually think the protection in a pool lending fund is better than doing your own deal. If you do your own deal and you have your note, you have your name on the note and deed of trust, a lot of our investors or a lot of investors like the security of having that. In a pool lending fund, you actually have that security, except you have it on every single property in the fund. The fund, its name is on there as the lender, and if something went wrong, the same security is there. The property can either be foreclosed on or taken back as a deed in lieu. But the big advantage is that now, instead of you being secured by one property, you are secured by absolutely every property in the fund from the first day. So even if you came in and there are 30 loans in our portfolio, once you come in, you are actually secured by every property in that portfolio. And by the way, in our portfolio, the only loan that has not gone as planned is that deal that I just mentioned. All the others have gone extremely well, but you are very much covered by all of those assets securing your loan or your investment.
Yeah, that makes sense. So instead of just being secured by one property, it's however many properties are in the fund at any given time. So that makes sense.
Yes.
So the next question is, I think that maybe you can address where these investments are happening. So the question is, are the pooled investments, are these exclusively properties in Colorado, or are you lending in other areas? Just kind of a feel for where the properties are located.
At the moment, I would say probably 90% of our properties and the primary collateral of our properties are located in Colorado. Why I say that, the primary collateral, is sometimes we will have 2 or even 3 properties securing a loan. So we have one loan in our portfolio that's additionally secured by a property in Washington State. So besides that, the second biggest state we're lending in right now is Wyoming, and we've got a few loans up there that are in the fund. And we're also licensed or registered in Florida and Nebraska. Now, Florida, that is going to be, the reason we went there is we have an investor that we've worked with here in Colorado. He found an opportunity in Florida. It was an opportunity we thought we couldn't pass up. So we are going to be working with him, and Florida's been a great state for real estate, with loans down there over the next year. But at the moment, I think it's between 90 and 95% of our assets are located in Colorado. Colorado will always continue to be our bread and butter. It's where we're located and it's what we know best. And I can assure you, when we do go into a new area, we have to be extremely vigilant about the market and knowing what we're getting into. Actually, I went down to Florida to visit a couple of areas down there and the property that we are going to be funding. So we're not looking to, bust out the whole United States right away or anything like that. We take it very slowly, make sure we're handling what we've got right in front of us, which is Colorado. And I expect that our portfolio would stay 80% or more invested in Colorado as we go forward.
Okay. Yep. And you maybe touched on this just earlier, but the next question's asking, typically how many properties are in the pooled portfolio?
It's growing. We have assets under management in our fund of $10 million. So it's not a huge fund, but that means we can really look after every loan carefully. But those $10 million are probably, there are probably 20 loans in our portfolio right now. So it's spread out. We do have some loans that are bigger. We have a $3 million loan in there that is about to pay off, very successful loan down in Pueblo, but we do like to keep our loan size down so that truly that risk is spread out, not get too many loans where they are an inordinate percentage of the portfolio. So in general, there are loans between 200,000 or even lower up to a few $1,000,000, but we're trying to keep it as diversified as we can so that no individual loan, or we try to avoid having any loan be too much of the percentage of the portfolio.
Yep, that makes sense. So the next question is asking about these pooled funds, are you regulated? Do you have to establish a certain kind of a fund? Just kind of if you could address what that looks like.
I would call it quasi or semi-regulated. In For the most part, we are not regulated, and the fund that we have is, I believe it's a 506C SEC exempt fund, which means you do not have to be registered and approved with the SEC, but you do need to fill out paperwork with them that you are starting this fund, and that they know about it. There's no approval process, but it is, in that sense, registered with them. This type of fund is open to, so what makes it a 506C and an exempt offering, meaning the SEC doesn't have to get involved, is that number one, it's only open to accredited investors. And I'm glad that came up. So if you did want to invest in our fund, it's for accredited investors, which real quickly is most of you are aware of that term, but a net worth of $1 million or income of $200,000 a year for the last 2 years. And our fund also gives us the ability to advertise. And for that, the accreditation, so every investor that comes into our fund needs to be accredited, and we need to actually verify that accreditation. The one step lower, I think the 506B does not require that verification of accreditation, but our fund does. So we have an outside company that will do that verification, and then we go from there.
Okay. The next question, and I don't want a number on this one, but is asking if there's a minimum to invest. And I'm going to say if they want to know the number, you can answer, is there a minimum? But don't give us a number, Dave.
I can do that. Yes, there is a minimum.
Okay. So what I would suggest for the individual that asked that is, reach out, and I'm sure Dave would be happy to share that with you. But yeah, I'm sure $1 doesn't do you much good, so it makes sense that you might have some requirements there.
Can
And
I say that it's a reasonable amount?
okay,
Okay?
fair enough.
All right.
The last question I'm seeing is related to your investors, kind of a breakdown of the number that do the pooled fund versus the one-off kind of deals where they're doing specific individual investments. What's the breakdown for you when it comes to that?
As I mentioned, there is generally more opportunity in our fund right now than in our individual investors making loans. But as I mentioned, we're still doing that. And sometimes we actually take loans that are in the fund, and when we need more liquidity, we assign those to individual investors. But I'd say from a loan standpoint right now, about 65% of our loans are funded in the fund and 35% by individual investors. We have investors in our pooled lending fund who are, many of them are also individual investors that will do a loan on their own if the circumstance presents itself that is required. So I'd say we have about 12 investors in our fund right now looking to, actually, I think it's a little bit higher. I think we have 14 investors in our fund and probably 10 or so individuals making private loans who are not in the fund. And most of those investors in the fund are also open to making individual loans as well.
Yeah, and I guess that makes sense, right? So if somebody did want to pull out of the fund, you got to figure out a way to make those funds available. And I guess that makes sense. You got a little juggling you have to do on your side.
Part of being a fund manager. Yes.
For sure. Well, Dave, I'm taking one more look here and not seeing any other questions, but what I would suggest is and I know some of those questions were unanswered, but if you do have questions, by all means, reach out to Dave directly. He'd be happy to talk with you. And Dave, I just want to say thank you so much for taking some time to educate us on trust deeds and the different ways to invest in them.
Oh, absolutely my pleasure, Chris. And thank you again for having me on. Thank you all for attending today. And any questions you have, whether you're looking to invest now or down the road or even never, my line is always open. Give me a call. I'd love to talk to you about anything on your mind.
Yep, yeah, fantastic. And I am just going to leave the New Direction Trust information up just momentarily as we say goodbye. If you happen to have questions related to investing retirement funds, we would certainly encourage you to reach out. We're more than happy to answer questions about using retirement funds to do these types of investments, whether it's trust deeds or precious metals or real estate. So we would encourage you to reach out to us as well. And so with that being said, Dave, I hope you have a great day and enjoy your weekend.
Thank you, Chris. You too.
All right, take care, everyone.